your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany, Austria, and Switzerland. Today I have a returning guest here with me. Hey Daniel, how you doing?
Hi Joe. Hi, very good. It's a pleasure to have me. Thank you very much for that.
Totally my pleasure. We may tell our audience that I interviewed you back in 2018. I do believe it was 2018. And a lot has changed. Therefore, we thought it would be prudent to really make an update, especially since you raised 100 million credit funding for your platform from Goldman Sachs, but that's something we will get to soon. I assume people already know, or some people will already know you from the interview, which, by the way, we linked down here in the show notes. I just looked it up. Was published on October 18th, 2018, almost 5 years ago.
Time flies.
Time flies, totally. You have been developing quite good, I would assume. We'll soon get into that. But can you tell our audience just a tiny bit on who you are, what you did before you got into fintechs?
Yes, sure. So my name is Daniel. I'm a co-founder of Creditshelf and currently CFO of the company. In my earlier life, I used to be a consultant, which is how I started off my career in strategy consulting, but I always worked in the financial services space. So even as a consultant, I got in touch with banks, insurance companies, and, this is how I stayed in the matter. And at some point, I got an offer from a large investment bank. So I joined this bank and basically, jumped over the fence from being a consultant to becoming a banker. I worked for, shy of 9 years in international investment banking with positions both in Singapore and Zurich. And at that point, we were launching a new business in Asia, which I did for the bank as a project at the time. And I thought to myself, after that project had been delivered, that at some point I would like to try something out by myself. And this is how we founded Creditshelf. And ever since, we're based here in Frankfurt, and with a nice business that is supporting SME customers from a credit perspective.
Mm-hmm. You already hit on credit and SMEs. So my understanding is you are a credit platform, not necessarily a P2P lending platform, but I think we'll soon clarify that. And for my understanding is right now you do some loans for small and medium enterprises, which build the backbone of the German economy, kleine und mittelständische Unternehmen. You're not exclusively funding them because your funding can also be part of a bank funding, is my understanding. And you basically match there on the platform institutional investors with the SME, so nothing like Lending Club does. Is that true?
Yeah, it's pretty much true. We provide loans to German SMEs, both the Mittelstand of today as well as the Mittelstand of tomorrow, meaning young, innovative, growing, fast-growing companies that have a need for capital in order for them to achieve their growth ambitions and, capture market share and develop markets. And we lend to these businesses because we see that there's a lack of funding from traditional debt providers such as banks. So our capital helps to, trigger and achieve additional business opportunities that would otherwise, not happen or not necessarily happen. And therefore we ultimately, support the German economy and the German Mittelstand, as I've said, with our credit products. I think the one element which I'd like to provide a little more detail on, because you said we match borrowers with institutional investors. It's not strictly a one-for-one matchmaking. We have, in the meantime, I think the platform has developed over the years. And in the meantime, we basically manage, dedicated funding vehicles, out of which we take the funds and then provide them to the SMEs. So therefore, institutional investors, such as, for example, the European Investment Fund and or other names, they basically provide funds typically into SPVs, which, serve the dedicated need of providing funds. And out of these, we take the money and we give it to SME customers.
Mm-hmm. We may add for our audience, since depending on the podcast, there may be more than half of the people abroad. The German Mittelstand, the SMEs, are very physical driven industrial companies. So that means when they get an order, they first need to go into all the funding and financing for all the machines, all the parts, all the manufacturing, until they can eventually sell it. And that bridge between purchasing all the materials and getting it to the client and get the money, that is what you're referring to, right?
Yeah, amongst others, this is what we finance, i.e. working capital situations like you have just explained. That serves, a big amount of our funding. In addition, we also finance M&A situations, for example, particularly, understanding that there's a demographic situation here in Germany. A lot of businesses, their current owners, they step out at some point, and there's a new generation of entrepreneurs who are set to take over these businesses. And that also often requires funding. So we can also provide M&A finance. As I said, we can provide longer term growth finance to support strategic investment initiatives. So our loan purposes are relatively broad. But clearly working capital, as you have explained, is the majority. Yeah.
Mm-hmm. I see. I remember that there was a study, from KfW, just recently, that on average the company owner that is looking for having a succession, so somebody taking over the company, as you referred to, is on average 64 years old. A third is over 60. So there's a lot going on here. It's not necessarily that you have like one company trying to purchase another company, but it's somebody stepping in and buying the company outright to basically take it over from the existing owner. You've been talking about a lack of funding for SMEs. In Germany, it's a lot of credit driven, meaning it goes onto the balance sheet of Volksbanken, Raiffeisen Banken, Sparkassen, all those little institutions in Germany, as well as the bigger ones, special loans by KfW, but also the big banks like the DZ Bank, Deutsche Bank, Commerzbank. They are all in the game here. So they heavily rely on credit financing German companies, especially the smaller ones. Where does this lack of funding, the lack of credit opportunities come from, in your opinion?
So what we often see, with those businesses, is that the banks are lending to them, which is absolutely crucial. And I think this is also a big difference to, let's say, some of the more southern countries in Europe, where in some aspects you even have a limited supply of bank funding. I think here in Germany, the case is a little more specific, and it relates to the fact that banks would typically want to lend on a fully secured basis. So they take assets, typically physical assets, as collateral to safeguard their loans. And they will, assess this kind of collateral very conservatively. And it means that for an amount of physical assets, there's only so much you can get in terms of lending. And then if that business, requires additional funds because there is a big order, coming in and they need, pre-funding, as you've just explained, or there's another opportunity in the market that they can capture, they need quick actioning, and they can't wait for the banks, and they can't wait for a bank to extend their credit line. Hence, our product is fully unsecured. It means that it complements nicely the existing bank funding because it does not touch any of the assets, from a collateralization perspective. It does not basically change the bank's position. And we just provide credit on top of the existing bank debt that the business has. And I think this is, so flexible. Decision making is swift. The customer can get, quick feedback, quick deployment of funds, and they can realize the projects that they want to realize in order for them, to go to the next level or simply achieve their objectives.
You actually made me smile when you said all is unsecured for the very simple reason that I remember from more than 20 years ago from a bank apprenticeship. Somebody told me the unsecured loans are the safest because you only hand it out to creditors, to borrowers that are able to pay back anyway. So that really made me smile, this flashback. We are talking a lot about lending money out. The main trigger for our interview today was the 100 million from Goldman Sachs that you can lend out, but that was not the start. I found news from 2019 where you started to build up your own fund with 30 million from the European Union through financial means. Can you take us a little bit along this journey when you started to do your own credit fundraising for your client on the platform?
Yeah. At one point, I think, if a platform like ours, over the years matures, and it develops, I think the need of having the whole funding under your own control becomes more important. So initially, when we set up Creditshelf, we were relying on smaller type institutional investors, for them to come onto the platform, look what we have in terms of projects available for funding and make their own decisions. Mm-hmm. But we realized that in order for you to have a reliable funding proposition to SMEs, you need to be able to fund. Anytime when you want to do a loan, you need to be able to fund that. Mm-hmm. And for this, let's say, controlling the funds and basically controlling the money is very important. So which is why we decided to, let's say, insource a little more, get more under our control, some of the funds. And that's how we launched our own Creditshelf loan fund at the time. And indeed, the European Investment Fund, which is the largest supranational investor in the world, they were an anchor investor from day one because they have a European, in fact, it's a pan-European mandate to support SMEs. And I think their view is that the existing bank channels alone, they are not sufficient. So they want to make sure that other channels, alternative sources of funding, will be developed and supported. And this is why they have chosen Creditshelf as their first and currently only partner in a German market from a credit platform perspective. So this is how we launched with them. And in the meantime, we have onboarded, additional funds into that loan fund. And as I've said, for us, it's an important element of our funding mix.
Mm-hmm. So basically, you have your own credit fund, you have institutional investors, and along those institutional investors, Goldman Sachs joined, and they're now all lending out the money through your platform. I would be curious what type of services you're providing there for the borrowers and the investors. I understand you need a legal entity, a bank there, working with the Raisin Bank here in Frankfurt. And but first, I would be interested what is the balance right now? How much do you have much more money to lend out, or do you have much more requests from companies to actually borrow money? What is that? And then we can get a little bit into how it would then actually work on your side when you approve a loan.
Yeah. So naturally, as a lending business, you want to have traffic on both sides, i.e. the funding side, as well as, let's say, the demand side, which is SMEs. I think historically, when I look back, probably, in the first couple of years, the bottleneck has been on the origination side, which means to find suitable borrowers that are, healthy borrowers that can afford the loans and that can repay the loans and basically fit them into our offering. I think in the meantime, and probably at least since a year or so ago since the dynamics changed, Ever since the war in Ukraine, of course, we've seen a strong tightening on the monetary supply side, and therefore interest rates are up. Money supply is much tighter than it used to be before. And of course, this has also found expression in the way, we are able to attract funding. And clearly, I would say at this point, the relative bottleneck, if you want to put it that way, has probably moved a little from the origination side to the funding side. Therefore, we're very happy to have secured additional significant funding from renowned international sources, and we are continuing that effort on the funding side. And there is good conversations with market participants, and I'm very confident that with the strong track record that we have over the many years that we've been in the market in the meantime, that we can secure additional funding by existing partners or potentially also new partners that will help us to essentially support the origination pipeline that we see, and that origination pipeline is getting stronger and stronger every year. Last year we've seen record levels of loan demand, and also this year is very strong.
Do you see, that was for most people a total surprise, the invasion of Ukraine. Then the inflation started spiking up, but I kind of get the feeling that this really settled now, especially that Germany came through the first winter with all the scare of high gas prices and not enough gas to heat our apartments and houses. After we all passed through this, fortunately, pretty much unscathed. Do you see a difference right now this year, the first quarter of this year, as we're talking on the very last day of this quarter, in terms of demand? Was there a change?
I think, first of all, I personally see that lots of the uncertainty and the sort of market turmoil and volatility that we've seen, particularly in the second half of last year, has relaxed in the meantime. Of course, we are in a new world, right? I think inflation is probably not going to go away as soon as we would have hoped. At the same time, rates will probably not move down to the sub-zero levels, that we've seen only a year ago back. And therefore, we're in a new normal. But I think the market has calibrated a little, and it seems as if things are getting more stable. I think on the energy front, that's probably also true. We've had lots of volatility. Many SMEs in the German market that run heavy industry intense production processes that requires energy. I mean, they've been very scared on the back of the price movements. But I think the situation we're now seeing, I think, suggests that there's a bit more stabilization, and that things will not, pan out as adverse as they, would have appeared maybe, half a year ago or so. So I think that's what we're seeing currently in the market. And, maybe to conclude, German SMEs have historically proven that they are very nimble, that they can adapt fast, to outside circumstances. And it is exactly that what we're seeing again in this crisis.
Okay, I see you guys are doing pretty well. You guys are growing. It doesn't necessarily reflect right now in your share price. At the time we've been talking, you said you were the only pure play fintech listed in Germany. Is that still the case?
Well, I think there's certainly been market developments and other IPOs, following ours in 2018. But I'd maintain that the majority, clearly the vast majority of fintechs, they're currently not in the public market. We have at the time chosen to do so for a number of reasons. Becoming an institutional business, we wanted to have a positive signaling effect, to institutional partners, as well as hire talent. We are still hiring as we speak, and therefore finding talent in the market is very crucial for us. And, at the time, I think the IPO and, subsequently as a public company, you have more visibility in the market. So this helped us in, attracting talent. And so these were considerations that we had at the time when we decided to step.
My understanding is that banks in Germany are right now not necessarily known for being very fast in approving credit. I've seen on your website it takes 2 minutes to request a loan, 48 hours for your check, 1 week to make an offer, and 4 weeks until the payout. Can you give us somehow perspective how realistic this is for you and how long it may take for a classical bank to do the same process?
Yeah, so I think these times are indicative. We can be faster than that, as we've proven. I think the fastest loan we've paid out was inside 1 week in an ideal process. Now, I think what we often hear from our customers is that the banks are taking weeks, if not months, for sure. And I think the big benefit of our process is that the amount of interaction required with the customer is very minimal. So we've really designed this process from a customer's perspective, trying to minimize time and effort, using existing information rather than specific information that has to be made up. So, for example, we take data from the accounting system of the customer. They can easily provide that to us by uploading via our secured portal. And with that, we can be very fast in providing the customer with a feedback, which is typically an indicative quote that we try to, bring out within 2 days. So we tell the customer, look, this is the amount of credit we can provide. This is the indicative price. And if they like to move on that basis, we go into the final step of the process, which is a small, if you call it, due diligence. So we assign a credit analyst on the case, and then we discuss the business, from a credit perspective, from a market perspective, from a financial risk perspective, from a sort of future ambitions perspective, to basically round up our view and, ultimately being able to make a final decision. And if that final decision is made, we simply allocate one of our, funding pots. So these are essentially credit boxes with pre-approved and predefined criteria that need to be matched. And essentially, if it goes through our process, that basically means that it usually is also suitable for one of our funding vehicles.
What does your average customer look like?
So the typical Creditshelf average customer is a family business that has been around for more than 20 years, has 20 million of annual turnover, and has been in the market, as I said, for a number of years. We often see these businesses sitting in the regions, so they're not necessarily domiciled in the big cities, but really sit in the regions. Industrial focus is often a connex that we see. So really, actually the backbone of the economy. So I always keep saying, for those of you that understand the German expression, überall wo es dampft, zischt und raucht, that's also where you find Creditshelf. So that's a typical Creditshelf customer.
Everywhere where it steams, pipes, and smokes. Exactly. That means like physical production. Yes.
Yeah, that's often what we see. Yeah.
I see. We've talked a lot about your company, how you do the credit, and your customer. Can you let us participate in your outlook? Where are you seeing this whole thing, meaning the economy, meaning your business going this year? I know there's a lot of uncertainty and forecasts are especially difficult concerning the future. I know all of that, but just a little hint.
Yeah, I think generally speaking, the need for capital is clearly crucial. For the business, we come out of a crisis, Corona, where I think still some of the businesses, they faced a difficult environment and difficult time. Fortunately, we had a lot of government support at the time, and banks passed through KfW loans. All of a sudden, we found ourselves in the next crisis, inflation, energy prices, and so on. So I think there is, coming out of those crises, there will be, need to propel growth. And that's why businesses need funding. And I think that the need for alternative, i.e. bank alternative funding, is only growing. So that's clearly what we can see in the market. That's a trend that will be continuing. Hence, funding sources outside traditional banks, will be ever more important going forward. And that's what we want to profit from.
Mm-hmm. I understand you guys are currently growing, but you're still based in Hessen. Since this is sponsored by the European Enterprise Network Hessen, how was your experience setting up shop here?
Very positive, I would say. I mean, there's often these, rumors of, talking about many obstacles and barriers when it comes to a founding process. I wouldn't want to go as far to say it was the easiest journey in the world, but it was on the other side also not, so cumbersome. So we have ongoing talks with the ecosystem here. We found good contacts. We exchange views, with people, both from the fintech as well as the non-fintech world. In our early days, we were one of the winners of the Gründerpreis of Stadt Frankfurt. So that also helped us, to establish our reach. And all in all, I must say we're very pleased and very happy to be here. There might not be as much, talent, particularly IT talent, as maybe in cities like Berlin. But on the other side, there is more of an expertise when it comes to financial services. And as we are ultimately also a financial services firm, that caters quite nicely to our needs.
Mm-hmm. We already got to the talent part. Are you guys currently hiring?
Yes, we continue to hire. We are always open and looking for hungry young talent. I think the good thing of working in a fintech is that you get much more responsibility and breadth in terms of the tasks and the daily business as compared to a bank. I mean, having spent quite a number of years in both worlds, I can certainly say that the fintech world, to me, is more exciting. You can prove yourself, you can learn a lot, and that's exactly what we're seeing, and this is why we continue to hire talent.
Mm-hmm. And usually the last question is if you're open to discussion with new investors. Since you're already listed, VC investment is not necessarily what you're looking for, but are you open to talk to credit investors that want to get in on your platform?
Yes, that's a continuous task. We speak to the market, we speak to dedicated credit investors, and yeah, so we clearly, to deliver the business plan, we need more funding on the credit side. And, that's always a dialogue that we keep having.
Sounds pretty good. I'll not take up more of your time. Sorry for all the interruptions we had. Apparently, we had some technical difficulties during the recording, but we powered through. Thank you very much. It was a pleasure having you as a guest.
Thank you so much, Joe.
Have a good day. Bye-bye.
Bye-bye.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.